What's up, guys? Today is Tuesday. It's 3:25 in the afternoon, and I want to go over the follow-up of the last videos that I've been making because we were talking about pyramiding, we were talking about entries and trend lines and how to identify like which high is valid and which one is not. And I want to go back to the beginning. I'll repeat myself because this is the example that I want to pick for to explain an idea, the process behind which I find trades. So we were on the weekly, we saw this candle, we saw rejection. Now, it's possible that you're going to see some retracement before the price starts to go on the downside, like we've been seeing now. So I was looking for a setup to short because my bias is short. And I was explaining that I wasn't interested in selling in this zone, and that I thought that this trend line here, this was the active trend line. What I would have liked to see would have been for price to bounce really quickly here and then go back to the downside so I could make a profit. But instead of that, we saw a reversal pattern. So it was a change of structure, which is bullish. So because of that pattern, I decided not to take the trade, and price penetrated this trend line. And I said, well, this is not looking good because now this trend line is in play. This one is no longer valid. So now we had a bed of resistance in that zone, and we had a resistance as well here with that trend line. And when talking about structures, what I'm seeing here is it's not confirmed yet, but it is a potential double top, which is it could be an Eve and Adam double top if it penetrates this line here. But right now it's not. I'll talk more about Eve and Adam later, but that's not the topic. So right now we went first. Price tested this resistance and then got rejected, and then came back because it needed to test this again with a mixture of this resistance zone here. And then it did what I love for price to see, is to go above a resistance or support and then get rejected right away, because then I know that there are people first that are stuck long. Those that bought the breakout are stuck on the long side, so they're gonna be squeezed. And second, if it's possible that the big guys, if the trigger stops, they could get a good fill and get good position sizing in order to fill their orders before going short. So these are the first indications, but if we go on a small time frame, even smaller than this, and this is where scalping comes in, because by going on to smaller time frames, you can find some patterns, and what I'm seeing here is a failure from the market to make new highs in this zone over here. So here we have rejection. Then it breaks on the downside, tests, and then breaks again on the downside. So now we're making lower lows and lower highs. And this is what I was talking about, is that what I want to see is some type of reversal structure. And then I want to see a break. I want to see some lower highs and lower lows, so that I can have a confirmation that I have a change in structure in the direction of my bias on the long term. So now if we go a bit bigger, remove this. Now we have a line here that gets broken. So this is the first valid entry that I would see. Arguably, I could have gotten in a bit earlier, but I wasn't in front of the computer. I didn't see this play out. But if I was really looking for a trade, these were just examples. Like, it's not something that I was actively trading. But once you see this, what I would wait for is for some type of retracement, and then I would short. And my stop would be at the structure, because now at the top of the reversal structure on the shorter time frame. Because now if price goes back there, then it invalidates whatever bias I had. So that would be my first entry. I would short. I could have shorted on the break here on that candle, but I prefer to enter on a reaction usually. And then if price breaks this again, then I would have beginning of a pyramid, and I would basically wait to see if we have some type of reaction, and then I would short on the second try on the downside, and then my entry would be somewhere above the last swing high over here, and then I would have two positions, and then I would sit on my hands for a bit to see how the trade plays out. That's how you do it. You just wait for lower lows, lower highs, and you keep adding to your position. It's easier said than done, of course, because there are wider swings that can take you out. So you can be patient and wait for these before you enter the third and fourth leg. But like right now, I think 2 legs would be enough, and then I would wait for that structure, which was the last reversal structure over here. I would wait for price to break on the downside and then test this again somehow. And then I would short in that area as we go lower. And these are the types of this is what I want to teach basically. It's that you go from a structure that says this is a downtrend because you're seeing lower lows and lower highs. Then you see a reversal. Then it says this is no longer a short. And then you see the uptrend with higher highs and higher lows. Then you see a kiss of a resistance in this case with a reversal pattern at a key moment, and then you wait for lower lows and lower highs, and then you short. And then if you see more, then you can short again and again and again. And since we're trading off of a weekly setup, then you can build you have plenty of time to build a big pyramid. So that will be the end of that idea. I think I've made my point quite clear. It all started with a candle and on the weekly, but it doesn't mean that it's going to be, it doesn't mean that the setup is good. It's possible that it's going to do one black bar and then go back to the upside. But at least it's the starting point of something. It's the starting point of an idea. Then you see if the idea is valid or not, and there's no other way than to risk a bit of money in the process. Just a quick follow-up. I'm just coming back from playing board games with friends, and I just shorted the shit out of the loony. This is basically what I'm seeing here. We had the bounce. I was saying that I like to sell on reactions, and now I have a reaction to the trend line. I have a bit of rejection on this candle, and now I have a break on the downside, so I shorted a little bit higher, and I'm gonna start the trade. So now the trade is active, and I'll try to keep a bit of footage and put it into a single video, because I don't want to put a video a day of the same thing over and over, but I want to treat this as a treatise on pyramiding. So I'll upload it maybe next week or something like that. So I'll keep you updated. All right, so we are the next morning, and it's 7:12 a.m. and this is what I see. So last night I shorted this, and I want to take you back to the basics. What I was saying is I go from pattern to pattern. So this pattern meant down no more, the megaphone. Then we had these higher highs, higher lows until here. And I was watching the structure of the channel from the relative highs, the highs that started this downtrend. So the first lower high, lower high, I connected these 2 points, and that made my trend line, and then I had the bounce, and then it finally broke on the downside here on a smaller time frame, a 5-wave pattern. And then it went back to kiss, so I shorted. Because now it was starting to show weakness. It wasn't able to do any type of follow-up on this little point of resistance. So when I see this is where I place my stop, because then it would become invalid, and I shorted here. So I wake up the next morning, get some pips. Now the plan is to pyramid. So what we're seeing is this. So we are here in a retracement. So I can short again now. And I could short here as well on the break. So the first position now I have protected. And so I have risk-free trade on 0.5% of my trading account, which may be small for some people, but to me this is the level that I'm comfortable at relative to the dollar amount that it represents in my account. So I take small positions so it doesn't mess with my mental, and then I take another half. If my goal is to reach 1%, then I'll start with 0.5%, see how it goes. So now I'll enter another 0.5%. I haven't done yet. I'm still on coffee, and I gotta give myself an hour or two just to wake up properly. And then if it breaks on the downside, I'll probably short again. And what I'll do is the second order here, I'll put a stop. I'll put a stop somewhere higher than this structure here once it penetrates on the downside. So now I'll have 3 active positions, 2 of which will be subject to a loss. The other one is already protected. So now I'm acting as if I have a 1.5% position, but really it was done in stages, and I'm managing the risk of the overall position slowly but surely to the downside in accordance with my bigger idea. The other thing worth mentioning is the apparition of yet another reversal pattern. So we're going from pattern to pattern, and this confirms to me the validity of my idea overall. So I'm expecting for this to hold. So this level is important, this one is important, and this one is important. And this is where having a counter plan is matters. Because you have to know if you put out a short, and at some point you have to know when your idea is no longer valid. And to me, it would be if this high is broken again, then it would mean that this head and shoulder pattern is invalid. So now it's very likely that it would go back to this high again and then would move up to the upside if it's able to destroy this type of structure so easily. But meanwhile, it hasn't happened. So what I expect here is for a little kiss of that trend line, maybe a little bit higher just to take some stops out. And then I'm expecting price to break this, at least until this zone here. So this is where you have to, like, pyramiding is very, very difficult. I don't want to kid you. Mentally and strategically and tactically, it's not that easy to do. So I would have to be careful with my words here, but if I was to go back in time, and I'm talking about me, I would start with only like three-legged pyramids. I would start my first position, then a second, and then a third, and then I would practice that for a while until I got better at it, and I would add more positions for longer periods of time. I'm talking weeks here. Now, if I'm basing a trade off of the weekly, then I expect a lot of volatility on short time frames until I see the confirmation of my idea. But then I have to hold a position for several weeks to let it play. Otherwise, why would I accept all this volatility on the short term if I'm not willing to bag all the pips that are gonna happen in the weeks to come? So you have to find your style, and you have to play in accordance with your experience and your objectives and the way you structure your transactions, basically. All right, so we are a few hours later. It's 9:05 right now, and the support got broken as I expected, and there was a retracement as I expected. So I shorted this again, and now I shorted this bottom. So now I have three positions. I've got one here. I've got one here, and now I have one here as well. So now that's three positions. As far as stops, this one I've protected a little bit lower. This one is protected as well. So my stop is there. Let me just put the lines in red. When I protect my positions, I usually take into account the spread and the fees, so that I'm completely flat and that I don't have an edge against me from my broker. So now what I expect from this is a little bit of wiggling. It's going to test this most likely. I don't know how far up it's going to go. Sometimes it goes a bit higher just to take people out. And then we should see the downside action up to here. This is where the randomness comes in. Like, I don't know how this is going to look like, what this is going to look like, and how it's going to play out. But for now, for this week, I'm not going to touch this cross again. I'm gonna let my position move in my direction. Oh, and by the way, the stop from this position is a bit higher than this high over here. So right now what's happening is I have two positions that are risk-free, one position that has a bit of risk on it, but not too much. And now I'm gonna give them space to breathe. If ever the market decides to move around, to change direction completely, that's okay. I will have a small paper cut of 0.5%, but right now I'm 1.5% of my money basically is working, and usually I don't build more than 5%, even if I'm not risking 5%. Before I stop pyramiding, and I try to establish positions into other crosses, because otherwise my equity like goes ballistic, and it gets me into an emotional roller coaster that I don't like, and that plays with my mind. And you will see that as you become better at trading and more experience, you will reach plateaus, and there will be plateaus where you can't stand anymore a certain amount of money negative into your account before it starts playing with your head. And this is very difficult to overcome. So you have to go from plateau to plateau until you become insensitive. And usually I know where my plateau is, and I trade smaller sizes below, so that my mind is crystal clear. And to me, it means trading smaller percentages of my accounts, and I feel comfortable with that. It's enough money, and I have a peaceful mindset and life in general. And I'm not always looking at the computer. Like right now, I had to do day trading in order to establish my long-term position. But now I'm entering the swing trading mode, where I let my position do its work and see if my long-term idea is good or not. And it's gonna happen. The position might completely get destroyed in the next couple of days, and that's okay. It's part of trading. It's not. But I know that my method works on average in my favor. So if I keep repeating that process of trading from structure to structure to structure and looking at the bigger picture, I know that I make money over time. So now I got to read books. I've got to make YouTube videos and do other stuff to occupy my mind in order to do the equivalent of sitting on my hands until the trade goes really in my direction, hopefully. But I never know what's going to happen. Never. And this is the mindset that you have to put yourself in, and not to change your strategy every time you have a bad trade. Because if you start going down that rabbit hole, you're always changing things, thinking that you're doing something wrong, without realizing that trading is about odds. It's not about being 100% right all the time. I'm not right 100% of the time. I'm wrong a lot of the times, but I'm patient. I wait, and when I see an opportunity, I have to pounce. I have to act and put some money on the line and take a risk in order to get the reward that goes with it. And with that, you have to accept to have losing trades. But a losing trade is not necessarily a bad trade. If it's well executed, if it's part of a plan, a structured plan that you put yourself in your head. I used to write my plans. Now I just do it. It's in my mind. It's like breathing, basically. So I don't do it anymore. But if you're starting in trading, I really recommend that you have a plan. You say, this is the setup. This is why I'm trying to short this market. This is what I see. My idea is going to be wrong at that point. And then I'm going to try to enter a short position when I see lower lows and lower highs. My stop is going to be there. And if my stop gets hit, I won't re-enter the market at a worse price. I won't start. You know, you have to write to yourself in order to incorporate these concepts into your mind, to your brain, until it becomes automatic. And that takes years in some cases. Some people are really good. I wasn't. I was a really late bloomer in trading, but I loved it. I was really passionate about it. But I had to learn on my own. I didn't have a mentor. I didn't have someone to explain to me the things that I'm explaining to you guys. So yeah, if you appreciate, give me a like. All right, so today is Thursday morning. It's 8:40, and I just shorted some more of the loonie to reestablish my pyramid. I shorted a bit more yesterday. Let me show you on my system. Basically, here in that zone was where I started shorting, because here there was a false breakout on the upside. It was unable to do a to break the resistance. And over here we have a big wick because there were some news going on today. Basically, yesterday there was some news. The Bank of Canada press conference made the loonie go up a lot, so it didn't quite test the resistance on the weekly, but we'll talk about that in a second. So what happened is it exited my the beginning of my pyramid. So I had 3 positions. One of them was exposed to risk, so I lost 0.5%, but the 2 other ones were already protected. So it's like it's almost like a flat trade for me. So now I need to it's the final test on this idea, basically, for me to see if I'm gonna keep on trying this idea. What I mean by that is that if you go on the weekly here, the whole premise of my trade was based on this big wick on the weekly, and what I want, like it happens a lot when you see these retests, and then it can close the week quite lower and then make a second wick of rejection. If it's that, then to me it's an even bigger confirmation, but it doesn't mean that it's going to do that. It's possible that it's going to keep going. If that's the case, I scrap the idea, I take the 0.5% loss, and I move on to the next idea. But keep in mind that while I'm doing this, I'm looking at other pairs as well, so I always have something going as far as trading ideas. I rarely trade only one thing at a time. So why did I short again? Basically, structure to structure. So this structure here meant the fact that it broke this aggressively and it closed. If you remember, I had shorted here. I had shorted here, and I had shorted at the bottom here. So I got dragged into, and this one got closed with a loss. And then the market broke out, tested, and then went back on. But now the structure is showing a head and shoulder pattern here, and we're making lower lows. And if we look at the news here on the CAD, so there's basically the US dollar that was affecting the price. So 8:30 was the news. This is Europe. So now there's tomorrow at 8:30 there's going to be news that might affect this pair. But other than that, the direction that we're going to see today should continue until the next news tomorrow. So this is why I've added. So now I have 2 positions. The first position being in this zone here, And then the second position is I shorted this again. Especially when you see these big spikes on news, it's usually the big banks trying to fill their orders, so they go and hunt the stops, and then the market goes in their direction. So we'll see how it plays out. It's probably going to be until next week, I would say, that I'm going to see some results on this. Hard to say at this point, but these are the next supports that I see, and where I might think of shorting some more, but we'll see. Right now I have two positions. My stop in both cases is at this resistance, the red one, and we'll see. Going back on trading view. So now what I expect is something like this. If it doesn't do that, then and it keeps going up, then the whole idea is going to be scrapped, and I'll move on to the next one. I had just uploaded this video, and I changed my mind about the stops for some reason. I was watching the price action, and I was seeing price move up, and I just decided to remove my stops. And then they went out and tested this high here and tried to get some more orders filled, like a stop hunting experiment that they did. So what this tells me is that the market or the big participants are not yet filled on their order, and there's not enough downwards pressure for now. So they revisited the highs to try to get some more people on the other side of the trade, so they could get their fill. So now I'm watching it to see if they try again, because if it goes again and it starts to wobble, like what I think is happening is I'm afraid that this will happen. That they try a couple times until they have all their orders filled, and then it goes finally on the downside. And I don't want to be taken out and watch on the sideline as my plan that I've been concocting for the whole week, for 3 days almost, gets wasted. Anyways, I was rambling there, so I had to cut it short. But basically, if you go look at the 1 hour chart, it looks good. I hope it's going to break on the downside, and I can get to show you a bit the process. So the last videos were about the process of which I find setups for pyramiding for trades in general, but if I see an opportunity to pyramid for a few days, a few weeks, then I'll take it, and I'll use intraday day trading in order to enter multiple positions, sometimes over multiple days. And then sometimes I just sit on my hands for a few weeks at a time and let my positions work for me. But the initial phase is very complicated, and it's a lot of trial and error. And I'm pretty happy that it was a failed attempt so far, because it shows you just that it's the same thing for everybody. We're all struggling with the market reversing in our face, and an idea is not always good. This one, I have no idea if it's going to be good or not. But I'm trying to teach you something here in the process. So we'll see how this trade turns out. I won't make videos until next week. Maybe if it goes my way, I'll try to film my thought process during the week and then upload a long video at the end of next week. Unless you guys prefer everyday type of thing, smaller videos, but a bit everyday, let me know in the comments below what you prefer. And don't forget to ask me questions if you have some. I'm always happy to answer those related to trading. And yeah, I'll see you in the next one. Peace.